Hey everyone, welcome back to BullionIQ. I hope you're having an amazing day. Today we're diving deep into what could be a critical moment for XRP and the broader crypto market as we approach the last Federal Reserve rate cut of 2025. According to my sources in market analysis, there's an over 85% chance that this cut will happen, and it's important to understand how this could affect XRP and crypto trading. First, let's set the stage. Historically, the last two cuts didn't cause huge market pumps. Even when we look at short-term charts like the 5-minute candle, not much happened immediately. However, right after those cuts, we saw some nasty dips and crashes. So the big question right now is, will this final cut of 2025 cause another drop, or could it lead to a positive market move? Earlier today, crypto has been a little unpredictable. BTC swung around 90,000 and XRP dipped under $2 to around $1.98 before bouncing back quickly. This shows that while prices are fluctuating, the market is still fragile and reactive to news. Now, the FOMC decision this week is highly anticipated. Current market sentiment shows roughly an 86% chance for a rate cut of 25 basis points, likely bringing the rate to between 350 and 375. Meanwhile, the market is expecting a pause in January. Essentially, the December cut is almost confirmed by data from CME and other polls, while early next year the Fed might hold rates steady. Understanding these probabilities is crucial because it allows investors and traders to position themselves strategically. One thing we've learned from previous Fed cuts is that announcements don't always trigger immediate bullish behavior. For example, after a previous cut, Powell mentioned during the FOMC minutes that December wasn't expected to be a cut. Prices reacted negatively despite the market hoping for a bullish move. That's why we can't blindly expect a spike just because a cut happens. The real driver often comes from the tone of Powell's press conference. If he's dovish, meaning open to supporting growth and signaling lower rates in the future, crypto prices could respond positively. If he's hawkish, prices could remain pressured. It's this nuance that traders need to watch carefully. As we head toward Wednesday, the market is preparing for the FOMC announcement. There's about 3 weeks left in 2025, and investors are trying to anticipate the final moves of the year. Crypto sentiment is a mix of fear, frustration, and hope. People have been holding, waiting, and some have given up. But this is precisely when careful observation and patience matter most. Traders looking for short-term gains need to act quickly and monitor charts closely, while long-term holders can focus on positioning for potential upside. If you're new here, consider subscribing to BullionIQ. We cover real-time updates, strategies, and tips for XRP and crypto traders. Also, for those interested in trading, I share a link below to BTCC, where you can open accounts, get bonuses, and start positioning yourself for the coming days. For example, there's currently a 2,500 XRP giveaway competition for members. Joining early allows you to be ready for both short-term trading opportunities and long-term growth strategies. To summarize, the market is at a critical juncture. The last rate cut of 2025 is almost certain, but how the market reacts depends on Powell's statements and investor behavior leading up to Wednesday. Prices have been fluctuating, fear and frustration are high, but opportunity is there for those who are prepared. Whether you're a trader looking for quick moves or a long-term holder planning for the next cycle, understanding market sentiment and positioning yourself strategically is essential. Stay alert, be patient, and keep following BullionIQ for updates. Let's dive deeper into what's happening leading up to Wednesday's FOMC announcement and why it matters for XRP and crypto traders. Market participants are currently buzzing with anticipation. Right now, Polymarket shows a 93% probability for a rate cut, while CME data indicates around 86%. This is a strong signal that most of the market is pricing in the cut. In other words, traders are already expecting this move, and it may be partially reflected in current prices. Historically, when a cut is expected, the immediate reaction can be muted because the market has already priced it in. And that's why even with high probabilities, the real excitement depends on the follow-up, how Powell communicates and the tone he sets during the press conference. Earlier this week, we've seen XRP hovering around $2. Small dips and quick recoveries show that short-term volatility is high, but the market lacks strong directional momentum. This is the calm before potential fireworks. Investors who understand market psychology know that calm periods often precede sharp movements. When liquidity is low and supply tight, even a moderate influx of buyers can push prices higher quickly. So while some may see $1.98 or $2 as boring, those paying attention see opportunity forming. Those who panic or give up now might miss the early stages of a significant market move. For traders, preparation is key. Some focus on scalping and short-term trading, watching 1-minute or 5-minute charts to catch small moves. Others take a long-term approach, buying and holding in anticipation of the rate cut and possible XRP rally. Both strategies require awareness of timing, liquidity, and market sentiment. The main takeaway is that whether you trade actively or hold for months, understanding the environment and the forces at play can make a big difference. This is especially true for XRP, where institutional moves, ETF inflows, and supply dynamics can amplify market reactions once demand picks up. Another critical factor is fear and frustration among retail traders. Many have been waiting for a breakout for months, and 2025 has been a slow year for Q4. Fear levels are high, and sentiment indicators show pessimism creeping back. Historically, these periods are exactly when opportunity appears. When most people give up, those who stay patient and informed often benefit the most. That's why having a clear plan is essential. Whether it's securing XRP in a wallet, diversifying exchange accounts, or setting target buy-sell points, preparation makes you part of the 1% who act wisely, while the 99% panic. This week is also unique because multiple events coincide. On Wednesday, not only do we have the FOMC announcement, but Powell will hold a press conference. Statements made during this event can drive additional market momentum. If he hints at more dovish measures or a longer-term accommodative stance, buyers could react strongly. On the other hand, if his tone is neutral or hawkish, prices could stagnate or dip. Understanding this dual layer, probability of a cut plus the tone of communication, is crucial for positioning. Finally, there's the psychological aspect. People are tired, frustrated, and sometimes skeptical of market hype. Many retail investors have thrown in the towel, waiting months for a move that hasn't yet materialized. But as seasoned traders know, this is often the moment when opportunity is quietly building behind the scenes. By remaining patient, monitoring key signals, and acting strategically, investors can benefit when the market finally shifts. In short, the upcoming FOMC cut is highly anticipated, probabilities are high, and the market has been pricing this in. XRP is moving within a narrow range, but the environment is setting up for potential volatility. Traders and holders who prepare carefully through diversified exchanges, secure wallets, and understanding market signals are the ones who can take advantage when this predicted cut meets market reality. Stay alert, stay patient, and get ready for what could be a critical week for XRP and crypto overall. Let's focus on what could happen immediately after the FOMC announcement and how XRP traders might position themselves. The first point to understand is that markets are rarely static. Even when a rate cut is widely expected, as it seems to be for this week, the real price reaction depends on how the news compares to expectations. If Powell's tone is dovish, signaling future cuts or continued support, the market could respond with a surge. Traders who anticipate this can position themselves ahead of time, but it's important to remember that sudden volatility can also trigger sharp corrections. XRP has shown resilience recently, bouncing quickly after small dips, which indicates that there is strong underlying support in this price range. Short-term traders will likely be watching smaller time frames from 1-minute to 5-minute charts for opportunities. Scalpers can benefit from quick movements, but this approach requires constant attention, discipline, and experience. Mistakes happen fast in high volatility moments, so preparation is critical. For long-term holders, the focus is different. They're looking at supply dynamics, institutional activity, and the potential for a supply shock to magnify the impact of increased demand. By holding XRP securely in wallets and planning trades across multiple exchanges, long-term investors can be ready to react if a sudden surge occurs. This dual approach, scalping for short-term gains and holding for long-term growth, illustrates the importance of tailoring your strategy to your goals and risk tolerance. Sentiment in the market is a major factor right now. Fear and frustration are at high levels after months of waiting for significant price action. Many retail investors have expressed impatience or even given up on gains for the rest of 2025. However, historical patterns in crypto show that these periods of pessimism often precede sudden upward moves. The logic is simple. When many traders have exited or are hesitant, the market has less selling pressure. As a result, even moderate buying activity can have a magnified effect on price. That's why patience and strategy matter more than ever. Being able to separate short-term noise from fundamental signals can give traders and holders an edge. Another key element is preparation across exchanges and wallets. If XRP suddenly reacts to the FOMC announcement, liquidity could be constrained on certain platforms. I always recommend spreading holdings across multiple reputable exchanges. This ensures access to funds if one exchange experiences delays or temporary halts during periods of high demand. Additionally, storing the majority of XRP in a hardware wallet protects against potential hacks or withdrawal freezes, which are more likely during sudden market surges. Secure preparation allows you to respond efficiently, whether for quick trades or long-term accumulation. Looking at the market's psychology, there's also an important lesson about staying in the 1% who act wisely while the 99% panic. Many traders give up too early or react emotionally to short-term dips. The market rewards those who maintain discipline, follow key indicators, and act strategically when opportunities arise. In this context, monitoring not only price but also volume, sentiment indicators, and institutional activity can help determine when the spark for a potential XRP rally occurs. Timing is everything. Finally, we can't ignore the broader macroeconomic context. While the cut is widely expected, the tone from Powell and subsequent market reaction could influence the crypto sector as a whole. Bitcoin, Ethereum, and other major assets will likely move in tandem with XRP during these moments, creating opportunities for cross-market strategies. Traders should stay informed, watch for real-time news, and be ready to act if volatility spikes. The combination of a high-probability Fed cut, tight XRP supply, and potential surge in demand sets the stage for a potentially critical week. Let's talk about practical steps you can take this week to stay ready for the potential XRP price movements around the FOMC announcement. First, preparation is everything. Traders and investors should make sure their exchange accounts are fully verified, funded, and ready for quick trades. I always recommend having multiple accounts on top exchanges like Binance, Coinbase, Kraken, and KuCoin. This diversification ensures that if one exchange experiences high traffic, temporary halts, or withdrawal limits, you still have access to funds on another platform. Think of it as having plan A, B, and C ready at all times. This reduces risk and allows you to act fast when volatility strikes. In addition to exchanges, secure storage is essential. A hardware wallet is the safest way to hold XRP long-term. Even the best exchanges can face hacks or temporarily freeze withdrawals during high volatility. Storing your coins offline ensures that no matter what happens on the market, your holdings are safe. Ledger wallets are a popular choice for many investors because they allow you to control your private keys directly. Always buy hardware wallets from the official manufacturers to avoid tampered devices. A secure setup means you can trade or act on opportunities without worrying about losing access to your XRP. Next, let's discuss strategies for both short-term traders and long-term holders. Short-term traders can benefit from scalping opportunities in 1-minute or 5-minute charts. They must watch for sudden price spikes or dips immediately after the FOMC announcement. Rapid reactions can be profitable, but this approach requires constant attention and discipline. Long-term holders, on the other hand, should focus on understanding market fundamentals, such as supply dynamics, ETF inflows, and institutional activity. These forces could create a supply shock that drives prices higher over time. By holding securely and observing the market, long-term investors can capitalize on sustained upward moves when others panic. Community and information are also key. Joining active crypto communities like Discord groups or Telegram channels allows you to receive breaking news, insights, and opinions before they make it into videos. Sharing strategies and discussing market sentiment with other investors can provide perspective and help you avoid making impulsive decisions. On BullionIQ, I share real-time updates and educational content to help viewers stay informed. Being part of a community ensures that you're not alone in watching the market, and it gives you a support system during volatile periods. Promotions and bonuses can also provide extra value. For example, BTCC is running a special XRP giveaway where trading at least $100 in your first 30 days can earn you free XRP. This is a way to grow your position without additional capital. While it's not a substitute for careful market analysis, it's a small advantage for those ready to participate. Make sure to read the terms and act promptly to benefit from these opportunities. Finally, the psychology of patience is crucial. Fear and frustration are high, especially after months of waiting for major price action in 2025. Many traders have exited positions or avoided buying due to discouragement. However, history shows that these low sentiment periods often precede strong rallies. The key is patience combined with preparation. By understanding the forces at play, Federal Open Market Committee decisions, institutional activity, exchange-traded fund inflows, and supply constraints, you can position yourself to benefit when the market finally reacts. Remember, the 1% who stay informed and act strategically often reap the rewards while the 99% panic. To summarize, this week requires preparation across exchanges, secure wallets, clear trading strategies, and active community engagement. Combining these elements with patience and careful observation increases your chances of success. Whether you're trading short-term or holding for long-term gains, having a clear plan ensures you're ready to react when XRP starts moving significantly after the FOMC announcement. First, understanding risk is critical. Crypto is volatile, and even highly probable events like this expected FOMC cut can create unpredictable market reactions. Always remember that nothing is guaranteed. While probabilities from Polymarket and CME suggest a rate cut, the tone of Powell's press conference, global news, or sudden market sentiment shifts can change the outcome in minutes. This is why preparation and flexibility are key. Traders need to know their limits, set stop-loss levels if they trade short-term, and avoid investing more than they can afford to lose. Long-term holders also benefit from risk management. By keeping the majority of XRP in secure wallets and only using a small portion for trading, investors can reduce exposure to sudden market volatility. This allows you to stay calm during sharp price swings. Patience is rewarded in crypto, especially when a supply shock is quietly building under the surface. The combination of ETF inflows, DeFi usage, institutional holdings, and Ripple's controlled release means that supply is tightening. When the spark of increased demand comes, prices could react quickly. Being prepared and patient puts you in the best position to benefit. Another important takeaway is strategy diversification. You don't need to rely solely on one exchange or one trading approach. Combining long-term holding with selective short-term trades allows you to take advantage of both slow trends and sudden spikes. For example, keeping a secure portion of XRP in a hardware wallet while actively trading smaller amounts on multiple exchanges ensures access, flexibility, and protection. This approach balances potential rewards with safety and reduces stress during high volatility periods. Community engagement remains a valuable resource. Participating in Discord groups, following updates on BullionIQ, and staying informed about real-time news can provide early signals and insights. When multiple traders share observations, market patterns often become easier to anticipate. Being part of a knowledgeable community also helps you stay disciplined, as peer discussions can prevent emotional decisions. Remember, information is power in crypto, and acting quickly on reliable updates can make a significant difference. Finally, let's discuss mindset. The market can be frustrating, especially after long periods of sideways movement or minor dips. Fear and impatience can tempt traders to sell prematurely or abandon positions. However, as we've seen historically, periods of low sentiment often precede explosive growth. Those who maintain patience, focus on fundamentals, and prepare thoroughly are usually the ones who see the best outcomes. Whether it's waiting for the FOMC decision, monitoring supply constraints, or observing institutional behavior, staying informed and calm is your greatest advantage. To summarize, this week is crucial for XRP. Preparation, risk management, strategy diversification, community engagement, and mindset all play a role in navigating potential market movements. Probabilities suggest a rate cut, supply is tightening through ETF holdings, DeFi participation, and institutional activity, and patience could pay off when demand surges. Short-term traders should focus on timing, execution, and stop-loss strategies, while long-term holders should ensure secure storage and maintain patience. By combining all these elements, investors can be ready to act decisively and take advantage of potential opportunities. In closing, remember that XRP's current stability is deceptive. Beneath the calm price movements, structural forces are quietly setting up a supply shock. Being prepared, staying informed, and holding a disciplined mindset can make the difference between missing an opportunity and positioning yourself for potential gains. This is why strategic planning, patience, and awareness are more important than ever. Stay vigilant, S.